Okay, let's get straight into the current market picture. We're seeing a real mix of signals right now.
Definitely.
Over the last 5 days, you've got the Dow Jones and the S&P 500. Well, they've both seen some gains. Pretty modest, though. 0.3% for the Dow, 0.06% for the S&P.
Barely moving, yeah.
Right. But interestingly, the NASDAQ, which is, heavy on tech stocks, it dipped slightly, just at 0.1%.
And that comes just as we're bracing for those big tech earnings reports, doesn't it? Apple, Amazon, Meta, Microsoft.
Yeah,
It's a huge week for them.
exactly. It feels like the market's holding its breath a bit there.
Yeah, in this activity, it really highlights the uncertainty that's just hanging in the air. On one hand, there's a bit of optimism, maybe trade tensions easing, potential tariff de-escalation.
People are hoping for that.
They are,
Yeah.
but that's getting weighed down by these growing worries about a potential recession.
Mm-hmm.
In fact, some economists are now saying there's like a 60% chance of a recession, and they're directly linking a big chunk of that risk to the tariffs that are already in place.
60%.
Yeah.
That's a significant number. Okay, let's drill down into some specific company moves. Boeing's stock jumped by a solid 2.5%.
Yeah, I saw that. That followed an upgrade from Bernstein, right, to outperform.
That's right. And Bernstein, they're a well-regarded research firm. So outperform basically means they think the stock will do better than the market average.
Makes sense.
Uh,
And this positive move for Boeing also seems tied to progress in buying back Spirit Aerosystems.
Yeah, the rationale there, as I understand it, is really about fixing those ongoing supply chain disruptions. They've been causing some real headaches.
For sure. But it's worth remembering Boeing is also under, well, increased scrutiny from the FAA, the Federal Aviation Administration.
Right, those safety concerns in the aerospace industry haven't gone away. That could still be a challenge.
Yeah, absolutely. Oh, and Bernstein set a price target of $218 for Boeing stock. So that's where they see it potentially heading.
Interesting. And on a related note, Spirit Aerosystems, their stock also rose, about 2.6%.
It did. And that seems largely because Airbus, the big aircraft manufacturer, one of Spirit's major customers, agreed to take over some of Spirit's plants.
Ah, okay. So that helps with potential antitrust issues.
Exactly. Concerns that the Boeing Spirit deal might reduce competition too much. This Airbus agreement helps smooth that over, it seems.
Okay, makes sense. Let's shift gears a bit. Over to the tech world. We're seeing some interesting dynamics in the AI chip market.
Oh, yeah.
NVIDIA's stock took a 2% hit. This came after reports that Huawei, the Chinese tech giant, is testing a new AI chip, a potential direct competitor.
Wow. That's potentially huge, especially for NVIDIA's dominance in the Chinese market.
Right, and what's kind of fascinating is how the U.S. export ban on advanced chips to China seems to have, well, unintentionally spurred Huawei to develop its own capabilities here.
Kind of created an opening for them.
Exactly, and analysts are already suggesting this competition could mean maybe a 15% to 20% drop in NVIDIA's China revenue in 2025.
That's a serious potential impact. Gives you a sense of the scale.
It really does. But interestingly, while NVIDIA was down, Intel's stock actually rose by 2%. So what's driving that? Well, it looks like it's anticipation for a new product launch from Intel. Suggests investors are still interested in Intel's AI strategy, their potential in this space too.
So the AI chip battle is definitely heating up.
No kidding. Okay, let's move over to pharmaceuticals. AbbVie had a strong showing. Their stock gained 3.4%.
Nice jump. What was behind that?
Really robust Q1 sales for their big drugs, Skyrizi and Rinvoq. Together, they brought in $7.2 billion.
Wow, $7.2 billion.
Yeah, so because of that strong performance, AbbVie actually raised its profit forecast for 2025.
Good news for them.
It is, but they also flagged a potential issue, the possibility of pharma import tariffs. They warned that they could cut their profit margins by maybe 5% to 7%.
So the tariff issue pops up again, even in pharma.
It seems to be everywhere. And also in that sector, Gilead Sciences saw a positive move too. Their stock is up 3.1%.
Okay, and for Gilead.
That was attributed to strong sales of their HIV drugs.
Yeah.
Apparently, that helped offset weaker sales of their COVID-19 treatments.
Got it. So strength in one area balancing out weakness in another.
Seems like it. Now, the crypto market, still volatile as ever, right?
Tell me about it. What happened with Bitcoin?
Well, it saw this rapid climb up to $95,700. That was its highest since February.
Okay.
But then, within the same day, it crashed back down to $92,800.
Yikes. That's a wild swing, even for Bitcoin. What's the thinking behind that?
Well, the usual suspects, really. Shifting sentiment about recession odds, plus speculative bets on the Fed maybe cutting interest rates later this year.
So lots of speculation driving things.
Seems that way, and everyone's watching the upcoming U.S. GDP and jobs data very closely. That could definitely sway Bitcoin's price further.
And in contrast to that roller coaster, gold is actually seeing more interest, right? As a safe haven.
Exactly. Gold jumped 1.7%, hit $3,355 an ounce.
Likely investors looking for a hedge, a way to protect assets against all this tariff uncertainty we keep talking about.
Seems like a classic flight to safety move. Now, Amazon, their stock dipped slightly. This was after Oppenheimer lowered its price target for the company.
Okay, and what was Oppenheimer's concern? Tariffs again?
You guessed it. Potential pressure from tariffs on Amazon's e-commerce profit margins.
Right, that makes sense. Their retail side is vulnerable.
Yeah. And while analysts are still predicting maybe 8% revenue growth for Amazon in Q1, there are these worries that overall profit could suffer if AWS, their cloud division, if its growth starts to slow down.
AWS has been the profit engine for so long. Any slowdown there would be significant.
Definitely. And it's worth noting, Amazon stock is actually down 15% year to date.
Ouch. Okay, tariffs are also creating some clear winners and losers in the shoe industry based on a Citi research note.
Yeah, that's right. Citi identified brands, like On Holding, they actually upgraded them to a buy rating, and Deckers, the company behind Hoka and UGG.
Okay, and why are they seen as better positioned?
It's mostly about their supply chains. They're largely based in Vietnam, which isn't as directly hit by the potential U.S.-China tariffs being discussed.
Ah, geographical diversification paying off.
Seems so. But on the flip side, you have major players like Nike and Under Armour. They could face pretty big challenges.
Yeah, like what? Price hikes.
Potentially, yeah. Maybe needing to raise prices by around 20%. And they could also face negative reactions from consumers, especially in China, because of these tariffs.
That could really hurt sales and brand perception.
Absolutely. And we're already seeing an effect. Retailers like Foot Locker and JD Sports, who sell a lot of Nike and Under Armour, their stocks both dropped about 3%.
Okay, so the ripples are spreading. Let's talk energy. Geopolitical tensions impacting things there.
Definitely. ExxonMobil's stock surged 4%. That was driven by Brent crude oil, the global benchmark, spiking up to $110 a barrel amid those Middle East tensions.
Right, tensions usually push oil prices up.
Usually. But there's an interesting split here. While Brent was up, U.S. crude oil actually fell by 1.86%.
Oh, why the difference?
It seems to be concerns about potential supply increases from OPEC plus the group of major oil producers. Fears they might pump more oil.
Huh. So geopolitical risk pushing Brent up, but supply fears pushing U.S. crude down. Interesting divergence.
It is. And despite that recent dip in U.S. crude, energy stocks overall are still up 12% year to date.
Pretty strong performance. But as always with oil, things can change fast. Positive developments in peace talks could easily reverse those gains.
Very true. Shifting to automakers, Tesla is under the spotlight again, this time for the Cybertruck.
What's happening there?
The company's stock dropped 5% after the NHTSA, that's the National Highway Traffic Safety Administration, announced they're launching a safety probe into the Cybertruck's braking system.
Uh-oh. A safety probe is never good news.
No, it's not. And this investigation could potentially lead to delays in Cybertruck deliveries in the second quarter.
Which means hitting their revenue numbers.
Exactly. Analysts are estimating it could be around a $2 billion risk in lost revenue for Tesla.
$2 billion? That's substantial.
It is. Though context is important, despite this setback, Tesla's stock is still up 18% compared to where it was after that tariff relief rally last week.
Right, so I had a big run-up before this news hit. Okay, what else? Any buzz in biotech?
Actually, yes. Moderna saw a really significant jump, 8%.
8%? That's big. What fueled that?
It seems to be based on, unconfirmed rumors. Whispers of a potential major partnership for a breakthrough Alzheimer's drug.
Alzheimer's?
Yeah.
That's obviously a huge potential market.
Oh.
But just rumors at this point.
Just rumors, no official announcements. But clearly the market is reacting to the potential. The Alzheimer's drug market is estimated to be worth over $5 billion.
Oh, wow. So even a whiff of success there gets investors excited.
Seems like it. And it lifted the whole biotech sector a bit. Biotech ETFs were up 2%, and other pharma companies like Gilead and Pfizer saw some gains too.
Interesting how sentiment can spread.
Yeah.
Okay, what about the Fed? Any signals on interest rates influencing things?
Yes, definitely. The yield on the 10-year Treasury note, that key benchmark, It fell to 4.21%.
Okay, yields down. Why?
It came after Fed Chair Powell hinted that a rate cut in December could be possible, but only if inflation shows more signs of easing.
Ah, the classic Fed conditional hint. Enough to move markets, though.
Absolutely. We saw a ripple effect in financials. Big banks like JP Morgan Chase dipped about 1%, and the US dollar fell too, hitting a 3-month low against the euro.
So markets are pricing in a slightly higher chance of a rate cut later this year based on those comments.
Looks that way. Finally, let's just take a step back for some historical context. The S&P 500 as it stands is down 6% so far this year.
Right. And that's significant because...
Well, apparently it marks the worst start to the year for the S&P during a Trump administration since Nixon was in office back in 1973.
Wow, that's quite a historical comparison.
It is. And historically, these weak starts often lead to average annual declines of around 5.5%.
Not exactly encouraging.
Not really. But on the other hand, we did have that 4.6% rally just last week. So that offers a bit of counter-optimism, maybe tied to those hopes for easing tariff tensions we mentioned earlier.
Right. So putting it all together, what we've really seen today is just how interconnected everything is, isn't it?
Totally. Seemingly separate events, tariffs, tech competition, geopolitical stuff, even drug rumors. They all create ripples across different sectors.
Absolutely. And looking ahead, this coming week feels pretty crucial.
Yeah, we've got those huge earnings reports from Apple and Amazon, plus key inflation data coming from the Fed.
Those events could really set the market's direction for the near term, couldn't they?
No doubt about it. It feels like a pivotal week.
So given all these diverse factors, these sometimes conflicting forces we've discussed, what do you, listening out there, think will be the single most significant element driving the market in the coming weeks? And why?
That's a great question. Definitely something worth thinking about as you follow the developments.